Thank you. My name's Amy Ciolek. Thanks a lot for having me today. Mortgage industry is a really interesting area when it comes to lending. I've been a regulatory lawyer in this space now for probably close to 8 to 10 years, and it's changing dramatically, and it's been quite an interesting journey watching it change. I came from an IT background, so when I got into law and started looking at the mortgage industry, I was kind of a bit surprised about how slow and cumbersome and clunky it was, and I just couldn't really understand why, lenders hadn't done more as far as trying to streamline things. And then it became pretty clear that the regulator was actually quite concerned about automation and about digitising, and so any change that did seem to happen was fairly incremental, and it wasn't necessarily a drastic type innovative change. It was more so an incremental digitisation of an existing paper process. So probably about 4 years ago, I got up at a credit law conference and spoke to my colleagues about it should be possible to conduct responsible lending in an automated way, and I got some pretty unimpressed feedback from ASIC, but it did kind of illustrate that this is possibly what's holding things back in the regulated mortgage space. Now, I'm joined today by 3 very interesting colleagues who have not just looked at incremental change or incremental digitisation in the mortgage lending space, but have actually gone into this space with a completely fresh slate and really drilled into what are some of the challenges that are being faced by consumers in the mortgage industry, and how can we resolve these without just digitally incrementing something. So I'm joined by Anthony Baum from TikTok, and Ruth Hatherley from Moneycatcha, and Vincent Turner from Home Loans. Now, each of these businesses do very, very different things, and it's quite interesting to hear a little bit about the value that they add and the benefits that they bring to consumers. So I'm going to start with TikTok, and TikTok is the first instant home loan provider which boasts that it can do verification and give a final decision within 22 minutes. Now, for anybody who's applied for a home loan lately, that's a pretty serious claim there. I think the average is about 42 days, isn't it, to get from end to end?
And getting longer.
And getting longer, yeah. So automation is obviously used in your business to achieve this kind of outcome. And it was only on probably about the 7th of April at the Financial Review AFR Summit that Brian Hartzer was talking about the importance of digitisation in the mortgage industry and how it does actually achieve benefits as far as lowering the cost of processing, it improves the quality of processing, and it also delivers a better quality and faster outcome. So how did you get around the challenge? How did you do this? It's not common to find a product that can process end-to-end so quickly. So how did you overcome some of the challenges, particularly around responsible lending?
Just check, can people hear me? Well, look, firstly, what we did is we looked at all of the legislation that relates to a home loan, and then we basically just solved for every part of the requirement as part of the process of developing and designing the platform. At the end of the day, the law is the law. We have to comply with every aspect of it, and we actually think that the best thing about a digital platform like TikTok's is you can basically fulfill the customer experience that the customer is looking for in terms of that real-time single pathway decision, but you can also do it in a way where the consistency of the application of the regulation, the consistency of application of all the rules within your decisioning platform are applied to every customer in a tailored pathway, solely focused on the appropriateness of the product for them in their circumstance.
Okay, so regulation was obviously a pretty serious consideration for you. I'll move across to Ruth now. So Ruth does something very different again. for those of you who've not heard of Moneycatcha, it's the first solution globally to combine blockchain solutions to solve challenges like loan regulation, loan data sharing, and risk reporting. So I was really amazed actually to speak with Ruth for the first time, to hear about her journey and her system. And she's kind of one of those untapped or those hidden gems that you don't really hear much about, but when you do, you just think, wow, where have you been hiding? You need to get yourself known. So can you tell us a little bit about homechain and regchain?
Yeah, sure. Basically what we decided to do when we thought that we would fix or try and help innovate the loan origination process is look at it from an ecosystem perspective. And that's such a buzzword today, but 3 years ago it wasn't as cool as it is today. So in my experience in the lending industry for 20 years, the pain was felt by many participants in that ecosystem, not just the consumer, not just the financial institution, but also the real estate agents, the valuers, the conveyancers. And so if we had a way that we could involve the ecosystem participants in a permissible way that allowed the financial institution case by case to decide what that permission was, that for us felt like it would be something pretty cool to explore. And so what we thought then is we needed to be able to verify as much of the information from third-party sources of truth. And one of my first thoughts was, Noah's brought up this morning, is around the ATO, and that's one of the last things, but it was actually kind of one of the things where I started was, if we were able to get this information directly and quickly in real time, how cool would that be? If we would be able to make rules and contracts around the verification attributes of that, and if we were able to then have an immutable record trail to be able to store the quality data that's in that transaction, what does that actually mean? And that was the basis of the homechain application. So we integrate from submission right through to settlement in a digital workflow, including integration with PEXA. And we knew that the PEXA enablement was on its way. We knew open banking was on its way. And so we thought if we built something that was ready for the future, we're future-proofing organisations. But what we also realised is during that process, we're capturing the exact data that is required for compliance and risk management for organisations. And so if we were able to help them have that as qualitative data, but then also be able to keep that evergreen, we were able to help them meet their risk and reporting requirements on a much more efficient and cost-effective way. And to the points of the speakers this morning, if you keep that information evergreen with comprehensive credit reporting and everything else coming along, we will actually have a better regulatory reporting environment, and there'll be more trust in the system. And therefore we'd be able to have better, more intuitive understanding of applicants, faster ways of delivering that finance, and having better reporting capabilities along the way. And so regchain and homechain, that's basically the ethic or the theory behind the platforms, and we deploy those in different ways depending upon the requirements of the organisation in component basis or in full end-to-end.
And what have some of the challenges been that you've faced? So that's a pretty monstrous task, redesigning an end-to-end platform on blockchain.
Yeah, you probably would have figured out by now I don't have a technical background, so I thought it was, not as a bigger job as what it was when we started on the journey. The graph that Noah showed this morning in terms of the different phases and in the sceptical phase, it was a race to be second to use us. So, all the institutions really liked what we were doing. We're fixing a major problem inside of their organisations. But if just someone else could go first, they'd be really happy to be the second on board. And so that's lovely when you're trying to sell something. So that was probably the biggest thing is the desire in the market and the financial industry to innovate, the talk around that, as opposed to the willingness to actually deploy and adapt innovative solutions. It didn't quite marry up in the beginning. And so that journey was a requirement of education. And also, blockchain 101 is Bitcoin is not blockchain, or it's not the only version of it, and there's a spectrum of use cases of blockchain. So having to educate the market around that and the safe mechanism that can be used, and also shortening the gap between the desire to innovate and the actual money on the line investment in innovation.
Yeah, very good. Interesting. So Vincent has tackled a completely different problem of the mortgage industry, which is around information, I guess, disinformation and information asymmetry. So what can you tell us, Vincent, about what UNO does and I guess one of your key value propositions?
Sure. So UNO is basically the best parts of a comparison site to do your own research, the advocacy and advice you would get from a traditional broker, and then the ease of dealing with the process digitally like you would with an online lender. And we believe that it gives a better outcome for a customer. It's either faster, it's easier, it's more effective, or even a better financial outcome. And for us, a key sort of plank of what's important is this idea of transparency or reducing information asymmetry. And it works to this idea of actually someone in one of our focus groups framed it really well, where he said, why is it that they get a screen and I don't get a screen? And we sort of took that to the bank with this idea that if we could take more of this information that's traditionally locked up inside broker platforms or lending platforms and expose that in a way where the consumer can put that into their own context, then we would help deliver better outcomes. And I think there's going to be a lot of talk about regulation and today, and I think of the rest of the conference as well. But regulation serves not necessarily to give an outcome to a customer. A lot of the time, consumers actually are willing to act in their own self-interest if you can actually give them access to the information. And a lot of what we heard from people traditionally in the industry was, it's too complex. It's too complex, this stuff. And I sort of debate that when I think about the modern vehicle is way too complex. This device in your pocket is incredibly complex as well. And it's the instrumentation that enables someone to make use of something in a simplified manner. And so we've built this tooling that the consumer can go directly into. And despite the fact there's literally 50,000 rules in the back end of that underpin who will lend you the money, how much they'll lend you, whether you'll be approved for what property and at what price and with what features. The tooling means that the consumer can interact with that and digest that and be much further along. And it has this side benefit as well, where they're not only more informed, but they're actually more engaged as well. And so when they do come to get advice, and in our observation, well over 95% of our customers still want advice, they still want help, and they want it from a human being, not from a computer. But when they do use the computer to begin with, they're much more engaged in the advice they're getting and they have more confidence and they trust it more.
Thank you. Anthony, I saw you nodding away there when when Vincent was discussing complexity. Is complexity another sort of aspect that you have tried to attack in TikTok?
Absolutely. At the end of the day, and it was interesting, Ruth's comments as well, I was listening and I've gone, actually, you're looking at what we do another way. You're using blockchain. We've effectively used 22 different technologies combined to achieve exactly the same thing. It's the data and the data sources together concurrently through a customer journey. Vincent's tackling a different problem, but using the same mechanisms. Ultimately is how all of us are trying to serve the customer better. And so basically the rationale I see happening in the industry is we need to think about it in that way, holistically, not just the innovative providers, but the mainstream providers as well. Because if you take some of the other opportunities that are there for the consumer is literally as the data becomes available, self-service should be easier, information about their financial position should be provided to them for them to validate, not the other way around. So there's so much opportunity ahead by taking this approach that I think we're all taking a different way.
Did you have anything to add to that, Ruth?
No, I think it's exactly the right thing. I think it's about the transparency of data, and that's the theme, I think, across all three technologies, is that the way that you are going to be able to drive efficiency, but not only just efficiency, but better answers and better outcomes is allowing the transparency from the consumer input point right through to the regulator output point and everywhere in between. And I think that technologies that focus on that and institutions that cultivate that is where we will actually drive that complete change and paradigm shift, I think, in lending.
Yeah, right. So we've talked a little bit about complexity and about 22 different technologies to achieve your end-to-end process. So would innovation be simplified if the regulators would just cut back on the regulation? Is that what the problem is? Are we over-regulated and is it impacting the consumer experience?
No, I don't think any of us think that, looking at us. I think
Regulation is a constraint, right? A regulation is like a design constraint. You know, you have to drive within the road. You have to have a text within 140 characters. Constraints actually make, in a lot of innovative context, it actually helps you to innovate when you have a constraint. I think the bigger constraints are going to be access to data, access to the ability to streamline a process that reflects the regulation rather than the regulation itself.
Yeah, and going on from that point of data, so I think that we're actually in a really unique environment, and I'm not sure how long the window is going to stay open for, but right now we've got regulators that are willing to actually allow us to participate in making new regulation going forward. You're seeing ASIC of having RegTech forums, you're seeing APRA having roundtables about their D2A replacement, you're seeing AusTracker allowing collaborative exercises, and I think that they're trying out the environment as much as to how they're going to decide to do the new regulation. And I think that it all comes back to access, transparency and trust in data. And I think that if we can all find a way to allow that to happen in a better way, that regulators will be allowed to move forward and perhaps have some ease in the regulation, but that bit there's got to happen first. The trust, transparency and reliance on the data allows that paradigm shift to happen.
What are your views?
I agree.
Okay. We've had a question come through. We've got a couple of questions actually. So what is the percentage of mortgage originations completed online today and what might it get to in the next few years? I wonder whether this means 100% end-to-end online or whether, I mean, there's various degrees of online.
Yeah, because I think the definition of that's really important. 100% of the loans that we see, we act as a broker, not as a lender, are done without any face-to-face. We have one lender who doesn't like us doing non-face-to-face, so those people are welcome to come into our office, but we don't write a lot of their loans because the consumer doesn't want it. The consumer wants advice, but they want to be able to do that without having to physically go and see that person. So I think it may be a bit of a false economy to think, oh, it has to be end-to-end, completely self-service, because I'm not convinced that most customers for an infrequent, high-value, high-emotion transaction like a mortgage want to do it without any form of help whatsoever. I think better measures of how well the industry is going is how long the customer has to take. 22 minutes is a good bar. How much effort the consumer has to take, how much rework has to happen on the back end as well are better measures of whether we're moving in the right direction.
I agree. The only thing on rework there is a great thing to point out is 60% of applications in this country are reworked, and they're reworked between 9 and 11 times. Now, if you can fix that part, that's the bit that the customer's pain point is. But I'd totally support the notion that consumers rarely and infrequently apply for lending, and having professionals stepping them through that process is considerably important, but allowing the professionals to be able to do that and actually provide the advice, what they're skilled and trained to do, is probably the better outcome than sitting and entering data and verifying information.
Yeah, I just think though, just on that one point of the pain point for the customer, I think when you're going through a mortgage process, the pain point is having to deal with the forms and the rework, and you need another document, and that is the pain in the process, but there is an unmet pain or an unknown pain, if you like, of people, most people today don't realise that they could be getting a better option than what they are. And we did some research around loyalty and found people who were loyal to their bank that they grew up with and had the bank account with as a child were actually paying 20 basis points on average more for their loan. Like, I think there's those needs as well that have to be surfaced and exposed and dealt back to the customer and fixed.
Do you want me to tackle the next one? Because it sort of leads on.
Yeah, are you comfortable with that question?
Yeah, absolutely. Very few is the answer, but how many get full approval and their documents within an hour of submitting an application? Lots. So the reality is that it comes down to accuracy of the information provided by the customer through the digital application pathway. And I agree, quite a few of our customers are either web chatting us or on the phone to us through that process, even though it is a seamless digital online experience. Basically, they submit, there'll be something that they have left out of that process that results in us needing to do follow-up inquiry, but lots have their docs in an hour. So, it's getting closer and closer to becoming the norm. Our platform refines all the time. One of the earlier speakers spoke about data and velocity and scale driving better and better capability. And that's a really critical thing for all of our business models, I'm sure, is that the nature of our platforms is the more customers that go through it, the better and better it gets.
We actually had research from some portions of consumers who said the faster it was, they actually lost a little of confidence in it. And it was, they wanted not to have too much time and effort, but in some cases they're like, oh, I couldn't trust this because it was too quick. I don't think we're quite there yet with it, but it was just interesting that some people almost wouldn't believe a decision that came back so quickly. Like it, I mean, it's almost a positive in a way when you surprise and delight someone that much.
Is it the speed or is it the aggravation of having to find documents that really bothers consumers, I wonder? Anyway, we've got one last question very quickly. Do you have any key strategic partnerships that have helped you to deliver your value propositions?
Probably I'll go first. I know someone else will probably talk about one as well. But Bendigo and Adelaide Bank own 35% of TikTok. You know, we threw out how a home loan had ever been originated in this country and started again. We needed a balance sheet to support that. And, you know, that really, for us, has been critical to, and the defining moment, really, in terms of being able to get to where we are today.
Ruth?
For us, it was a lot of internally industry, so we're a private company with private investors, but we were able to very early on showing the concept, even when I was in prototype and proof of concept stage, to Landgate, was a the WA Land Titling Office. I went to PEXA, so I went to the people that we needed to integrate with and say, this is the technology we're looking at building. In fact, Equifax was one of the first people that were very supportive, thank you very much. But we were able to show them the technology. We got grants from Landgate to actually help us build that out. And then once we actually were at a stage where we were confident that the industry were going to accept it, we were able to have discussions with global organisations. So KPMG is one of the people that support us very generously in terms of industry awareness, and obviously HSBC as a global bank was an extremely important strategic partner for us to really validate the technology, not just on going back to the point of scalability, that an organisation like that doesn't look at you unless you're able to pass all of the internal security reviews, which everybody would understand the pain of, but secondly be able to be proven out to be a scalable technology.
And we, you know, obviously has Westpac as a major investor, strategic investor. I think why that mattered, we actually wrote down about the 10 reasons why that mattered, and one of the ones that I think is probably most pertinent, and it actually came up in the first presentation today, is when you're trying to change an industry, it's hard to do it from the outside. And I think a lot of the time we talk about regulation as being something that might slow down innovation. I think a lot of the time there's a morass that comes with an existing industry not wanting to change. And we posited, and I think we're finding as well, that by partnering with a large established player in the industry, it is actually helping us to innovate outside of the bank, but is also bringing that innovation inside to one of the big four, which you would expect over time would have an impact on the industry more broadly.
Thank you very much. That's all we've got time for today. Thanks for the questions, and I'd like to ask you to thank our guests.